Longtime fans of the channel will remember this challenge. In 2024, at the beginning, I bought 10 high-yielding dividend stocks, dividend ETFs, focused on building a pretty rounded dividend portfolio. And today we're going over the successes and losses of that portfolio. Some of these have made insane returns. Some of these are stocks that you probably have never considered buying if you're a high-yield investor or if you like weekly payments. But some of them may be worth it. So we're going to do a full breakdown. We have Coney and tsly in this account, and it's been crazy years for both of them, both good and bad. We're going to show what we bought them for, and then we're going to jump into our spreadsheet and talk about exactly how much money we've made on these and which ones have lost money. And then we will compare it to all the larger indices as well, like the SPY, and the NASDAQ, and all that good stuff. So I hope you guys enjoy. If you're interested in stocks, dividend investing, if you want to make money in 2025, don't forget to like the video and subscribe. It helps me out a ton. I am so grateful for all of you guys. I'm hoping to get to 5,000 by 2025. So thank you guys so much. Let's roll the intro. Right off the bat, this thing dove 10%. I remember this is why I don't like trading in January and February, because it literally dropped, over 10%. We were down $102 at one point, and then it trailed back up, and it was consistent, and I loved it. We've seen some crazy payouts from different funds, but all in all, we're going to give our full breakdown. Let's go over all of the funds that this account holds, because now it's 11, and I'll explain why. So we have ARCC. Currently valued at $117.78. All of these, because Robinhood has partial share purchases, all of these were $100 flat invested. ARCC is up almost $18. JEPQ is up $27. SPYI is up $20. Coney is up $45. Main Street Capital is up $41. If you would have told me that Main Street Capital would be right behind Coney in this challenge, I would not have believed you at any point over the last year. 3M is at $21 gained, but there's more to that. We have Vici Properties that is actually down $5.20. We have Leg, which is down $60. So I'm going to do a calculation on if I didn't include Leg in this. It is down so substantially that it has dropped the return of this portfolio by a pretty heavy amount, and it really, really sucks. I was very disappointed. The funniest thing is I was waiting for Leg and 3M to be the most calm, consistent, lower yielding stocks. Then they both cut their dividends. 3M did a spin-off, and Leg just tanked and stayed down there, cut its dividend by like 90%, and so now we're sitting on a crazy loss with that one. We have MPW down 20%. That one was risky from the get-go. It was doing really good at some points and then sold back off. tsly's up $35, and SOLV is trading at $15.37. Well, what's SOLV? It doesn't even pay a dividend. You might be asking, that is the spinoff from 3M. So 3M is not up $21. It's actually up about $36, $37 because of the spinoff that was gifted to the account for every share of 3M that you owned. Now, SOLV hasn't really done much. It hasn't traded upward, but it still is an extra share of something that I have, or I should say a fifth of a share that I have just because I held Main during that portion. Now, I'm very, very happy with some of the returns in this, but again, some of them are so unbelievably terrible. Mostly just Leg, 62%. I'm so disappointed. It is crazy how the safest one that I chose for the account is performing the worst. Just in price appreciation, and the dividend cuts have been insane. Just wild. So we're going to go into our tracking spreadsheet and see how all of these paid out. What was the biggest winner? What paid out the most in dividends? What had the worst NAV erosion? All that and more. So let's go ahead and jump into our spreadsheet. So here on our home page of the portfolio, we can see our monthly payments. Some of these are good. Some of them are a little lower, but not bad whatsoever. We did have a pretty crazy mix. So let's jump. If I pull Robinhood back up, ARCC is quarterly, JEPQ is monthly, SPYI is monthly, Coney's monthly, Main is monthly, 3M quarterly, Vici quarterly, Leg quarterly, MPW quarterly, tsly monthly, and SOLV doesn't pay a dividend at all. So that is how that works. Our annual dividend income was $220, which is a 22% return just off the bat. Our market return is down $98 because some of ours, while paying out heavily, cough, cough, Coney and tsly, consistently fell by quite a large margin. So we are going to pull up our monthly dividend log. Now, I actually put all this data in myself. The only thing I will note, SPYI has not paid out for the month of December yet. So I just put in the month prior. Typically, it goes up. Some months it paid out higher, but I'm just playing it safe, putting in $1.20 for the last payment and calling it good. Now, our highest dividend getter was Coney. It paid out $120.78 in dividends in 2024 for the number of shares that we had, which is insane. Next, we have TSLY at almost $37 for the year, which is wild. And then we're coming back down to reality with some of these more normal ones. SPYI paying $13.50, JEPQ at $11.24, and ARCC at $10.14. Now, one thing I want to note, I have DRIP on in this account. That's very, very important because it makes what the whole account, it makes it what it is. So we can see with SPYI, this is the power of DRIP, and with JEPQ. We can see it with more than that, ARCC. You see the dividend amount grow. So we started with 245, 251, 256, and 262. Not a lot of growth with ARCC, but it's a low growth fund. JEPQ, we started at 78 cents and then 60 cents, worked our way up through the 80s, jumped through the 90s, and then now we're sitting at usually $1 to $1.20 in dividends every single month, which is wild. SPYI showed this one perfectly, going up roughly a penny to 2 pennies every single month, and then even better once we got more money into the account. So closing out at $1.20 when we started at $1.02, an 18-cent differential. We know that Coney and tsly were all over the map. I don't know what exactly even happened with these. It was pretty all over the place. Coney still paying out that insane dividend distribution. I'm not sure how I just missed my last tsly dividends. I updated the last three. $58 from tsly, which is crazy. It's a big jump. These last dividends have been insane. It's been putting out crazy dividends with Tesla going so insane. So not a close margin now. tsly is way up there. It's about half of Coney, but still solid return. And we'll see how the actual price came out with this. But still, like I said, all over the place. We got into the highest paid dividend from tsly was $9. The highest from Coney was $17 in November of 2024. This is post-election. This is because because crypto ran like crazy with the news of Trump going into office once more. So absolutely wild return for Coney. That was the best month. Before then, it had kind of been dwindling down. But again, not too bad. Main Street Capital, absolutely insane. Here's the thing with Main Street Capital, looking at a 40% return on the year. And I love this one. This is one of the largest. It's one of the 3 largest positions in my Roth IRA. It pays special dividends like mad. And I'm not joking. So it was averaging 56 cents, and then it would pay $1.28. And then 57 cents, and then $1.30. And what you notice is every time it pays that higher dividend, it bumps up the next dividend because we're buying more. DRIP is on. And so then the next following special dividend was $1.34, and then 61. And we didn't see a special dividend again, but maybe we will. Maybe we just haven't seen it yet in December. I'm not sure. If it does happen, I'll try and update you guys. 3M cut their dividend. We saw that drop. Leg cut their dividend, paying $1.75 and then down to 20 cents. Absolutely insane. 3M cut theirs by half with the SOLV spinoff. We still got a lot of money back from SOLV, and 3M's price rebounded really nicely, but still pretty crazy. Vici, pretty consistent, growing a little bit. I think it did end relatively positive, maybe a little bit. It was on a bit of a run and then sold back off. Leg, you guys know it sucks. MPW, also a bit of a bummer. We're going to check out the total return now with all the market return and then our percentage return, which is a huge deal. So we can see our total return, our market return is pretty insane. ARCC went up $10, and we're looking at a 17% return on the year because of those strong dividends. Then we had JEPQ, which market return, it went up $15.77. Total return $27 for a 24.32% return on JEPQ. Really solid. Then we have SPYI at $8 return, a little bit lower, but total return $21.85, looking at a total return of 19.49%. So solid. I was surprised that JEPQ outcompeted with SPYI, but it's good to know. It's interesting to know this. And then we have Coney, which is down $77. Which is crazy. Your market return is 35% because remember, DRIP is on. Total return, we are up $43.42 with Coney, and we're looking at a 19.66% return. Absolutely wild. Coney, it did beat out SPYI and ARCC, but it did not beat out JEPQ. Then we're getting into some of the serious winners. We have Main Street Capital with a total return of $42. The market return was up $32.86. And then so that puts our total return percentage-wise at 38.48%, the second biggest winner in the account. Absolutely phenomenal. We have 3M. It went up just price-wise by market return, $33.80, and it was down. Like, it was down terribly. And then we have the total return of 42.33%, making 3M the best returner in this account. But before you go saying, oh, I told you all the old dividend kings and dividend aristocrats will outperform all these new, youngster ETFs and funds and whatnot. You guys don't talk like that, I know. Leg is coming up, so don't get too far ahead of yourself. Vici down 4%, which is definitely a bummer. It did drop recently. It was on a bit of a tear over the last month. Kind of traded sideways. It's a little bit of a younger fund, I would say, so it has room to grow, but you might have some years of it just sitting and doing nothing. And then we have Leg, the biggest loser in the account. Total return or market return of $63.67 and a total return percentage-wise of 60%. Down. We're down 60.19%. MPW, not good either. We lost $24 in market return, and for a percentage return, we're down 15.78%. There was a point where this one was up. Compared to Leg was always down. It started the account down. I think the first day I bought it, it dropped like 2%, and I was like, oh, it'll bounce back up. No, it won't. It never did, which sucks. Then we end with TSLY of the initial 10 that we purchased. Which I am happy with TSLY. We're up 21%. We are down $24, but again, we're still up 21%. And SOLV, we're down 36 cents, but we're actually up because this was a bonus. So 3M is actually up more than 42%, which I think is absolutely insane. It really did outperform everything. It's not even close, because if you add in another $15 in total return, it kicks that up pretty nicely. Now, let's look at what all of the indices did over the last year. So first, I just pulled everything. I removed Leg from the account, and then we're up 35%. So Leg significantly dropped this account, and that's what happens when you have one big loser. Luckily, we had, 8 solid winners, but without Leg, without the biggest loser, we're looking at a 35.5% return. Now, when we pull this up in a drip calculator, let's look at SPY. SPY during this time is up 27% with dividends, 27.6% with dividends reinvested. So we beat SPY without Leg. With Leg, we lost to SPY. And I mean the S&P 500. Let's do the NASDAQ 100. Okay, NASDAQ compared to SPY from the beginning of this year. The NASDAQ 100, they're both pretty close. QQQQ comes out on top at a 30% return, which is phenomenal, but again, lower than 35, but higher than 14. Now let's do the Dow. The Dow only 16%, so we nearly beat the Dow even with Leg included. But this just goes to show you one bad apple can really hurt your account. You guys need to do as much research as you can on absolutely everything. Now, this experience has been super fun. It's been super interesting to see all the returns that we've gotten from this year. I'm thinking about not doing this challenge again and doing a YieldMax return and just using the funds. I own most of these in my Roth IRA anyway, so I can still track their returns, and I might do my portfolio versus the YieldMax portfolio versus the weekly paying dividend portfolio versus a high growth portfolio. Let me know what you guys think. I hope you guys did enjoy this journey. It's been so cool, and we did make money in the end, albeit with Leg trying to stop us at every step of the way. So I really appreciate you guys for watching and subscribing. Since the beginning of this challenge, I grew from 1,385 subscribers all the way to 4,800 where we're sitting now. I could not be more grateful for you guys. Thank you so much for everything that you've given me. It's been so fun, and I will continue in 2025 to keep making content, and hopefully you guys will keep enjoying it and keep watching it. I'm so thankful. Thank you guys so much for watching this video. Let me know what you think in the comments. Let's see what we're going to do for 2025, and I hope to see you in the next video.